Now, I'm sure I don't have to tell you guys, but everything's expensive. Gas is expensive, food's expensive, insurance is expensive, and homes are expensive. This is leading many homeowners to start tapping into their home equity in order to cover these increasing costs. So is this a smart use of equity, or will this lead to economic ruin? Let's get to it. What is up, everybody? Welcome back to the channel. If you didn't already know, my name's Jay Costa. I'm a real estate investor, builder, and agent here in Northern New Jersey. And if you get value out of this video, please hit that like button down below after you watch, and also consider subscribing, because we're building a community here of like-minded individuals looking to build wealth, specifically in real estate. And even more specifically, we talk a lot on this channel about using a HELOC, a home equity line of credit, to do so. So if that interests you, definitely subscribe and hit the notification bell. That way you can get my weekly videos sent right to your phone. Ding, wherever you are, you get to watch and enjoy. Since we talk a lot about HELOCs on this channel, I wanted to show you some statistics that I just saw in a Yahoo Finance article that shows you how homeowners are currently using their HELOC. So according to Google search data analyzed by a real estate firm called Ruby Home out in California, Google searches for HELOC have jumped 305% just since the beginning of this year, 2023. It says here, quote, homeowners that bought a few years ago at lower prices and lower interest rates could feel trapped. If they've considered buying a new home, they've looked around at today's prices and also know they can never replace the historically low interest rate that they have now. I've said this before in previous videos that I think that homeowners in this economy and in this market are essentially trapped where they're living, because whether they like it or not, they go out and they look to see what they can replace it with, whether they need a bigger place or a smaller place or whatever. The replacement cost for what they already have is so much higher than what they're paying now monthly payment-wise. This situation is taking an already low inventory housing market and tightening it even more. So instead of selling and moving to a new home, many homeowners have decided to renovate or add on to their current home, and a HELOC is a pretty popular, it seems, way to do this. In fact, according to the Mortgage Bankers Association, about 65% of HELOC borrowers are stated to be using their HELOC for home renovations. Another 25% said it was for debt consolidation, and another 10% for other undisclosed reasons. Now, keep in mind, when you apply for a home equity line of credit, the lender will ask you what your plan is for this HELOC, like what you're going to use it for. And you could say like to remodel the home or renovate the home, but then go use it on something completely different, basically whatever you want. So take that into account when you see these numbers. If I had to guess, I would say that the number of people that are actually using it for home renovations is probably much less than that 65% figure. And the amount of people that are using it for other reasons like debt consolidation is probably much higher than that 25% figure. So keep that in mind. The article continues to state that even though home equity loans carry a higher rate, a small loan for home improvement still works in their favor. The blended rate of the HELOC with their first mortgage is still below market rates for a new first mortgage. Now, this is true if you take your original 2.5% or 3% mortgage interest payment and you add on a 9% HELOC for $100,000 or whatever, chances are that is still probably less interest paid than you would be getting on a new 7% mortgage or whatever it is right now. And of course, with a HELOC, you do always have the option to pay off the balance when you want to. But there's more to it and more risk involved that we will get to in a little bit. It continues with, quote, the housing inventory shortage combined with home price appreciation and a low rate first mortgage make home renovations an attractive alternative for many homeowners who are looking to improve their spaces. Additionally, a HELOC or home equity loan is one way to finance big home projects while receiving tax advantages through the deductibility of mortgage interest. Now, of course, this is true, and I made a video about this right before tax time on whether or not HELOC interest is tax deductible. I'll put a link in the description as well as up in the corner if that interests you. But basically, you could only deduct the interest on a HELOC if you're using it to improve that home. And that's fine. But my concern, and really the main reason why I wanted to go over these numbers and make this video, is I have a concern that homeowners are feeling the increase in rising living expenses, as we all are, and tapping into this home equity in order to cover living expenses when they don't have the money to pay it back. And they do this just assuming that their home value will just continue to constantly and consistently go up. We've been talking for a while now on this channel about how to use your HELOC safely and effectively in order to build wealth. You could use it to buy a fix and flip property. You could use it to buy and renovate and refinance a long-term rental buy and hold property. And you can even use it for debt consolidation. I've made a video on this as well. I'll put a link in the description on whether or not you should be paying off credit card and consumer debt with your HELOC. You can do it, but you need to have discipline. If you have the discipline to pay it off, you'll save on some interest. But that's where everyone gets into sticky situations and big problems, because most people don't have the discipline. And once they put the consolidated debt into another account somewhere, in this case, a HELOC, they will just go get another credit card, and it's a whole nother cycle. And you look up and you have nothing left. But in my opinion, you should not be using a home equity line of credit in order to renovate or add on to your home. Here's why. HELOCs are variable rate loan products, and anytime you tie your monthly housing payment to a variable rate loan, there is a substantial amount of risk that is involved with that. As we have seen over the past year and a half or so, interest rates are not always low. The interest rate can and will fluctuate, go up or go down based on market conditions. And if you took $100,000 out of your HELOC 2 years ago in order to put in a new pool with a cabana, and back then you're paying 3% interest and now you're paying close to 9%, what is that doing to the monthly nut you got to cover? Now, in the past 2 years, chances are your home still did go up in value, so that may give you a false sense of security, but what about when it doesn't? What would happen if the economy took a hit and the value of your home went down just 10%? And what if you lose your job? These are legitimate situations that happen throughout history all the time. And if that happens to you while you've tapped out your home equity, you will be forced to sell your home that you and your family live in order to cover all of these debts. Now, this article also shows the top 10 states that the HELOC is being most searched for on Google. And if you look at all of them, they're all the states that had the highest run up in both housing prices as well as living expenses. This tells me that many homeowners in these places, as well as around the country in general, are feeling pinched and squeezed out from these rising costs and are tapping into their equity without any way to pay it back. This can lead to financial ruin for both these individuals as well as the economy in general. Throughout almost all of my HELOC videos, I tell you my top 3 rules for using a HELOC. Number 1, you need an exit strategy. Number 2, it needs to be short term. And number 3, you should never take money out of your HELOC that you don't have another way or plan to pay it back. It seems like many homeowners that are using their HELOCs as home improvement vehicles, loan vehicles, are violating at least the first 2 rules that I have, and probably all 3, because they assume that the value of their home is just going to continue to go up in value. And they're basically using their HELOC and their personal home as a piggy bank in order to make it better. These 3 simple and basic rules will allow you to use your HELOC simply and effectively and safely in order to build wealth while protecting you and your family's home. So what do you think? What do you think about this situation after reading all of these and hearing all of these statistics? Do you think that the U.S. homeowner is robbing Peter to pay Paul in order to cover living expenses with money that they don't have? Or is this a smart move? Is this a better financial move than to sell their home and move into another one that more fits their needs? Drop a comment in the comment section down below and let me know what you think, and I will see you guys next time.